welcome back. Now, everyone has an opinion. What's the best alternative investment? All right, is it stocks? Is it bonds? Well, those are pretty conventional investments. People have all kinds of ideas of what they should invest in and what they shouldn't. So if stocks and bonds and mutual funds are the conventional, that means there's hundreds of things that are alternative investments that aren't the conventional and not the traditional. So let's kind of look at that and see what's good for you. Now, many investors like to use their individual retirement accounts to invest. Nothing wrong with that. The government sets aside records that say you must do certain things when you invest with your IRA. For example, you can put silver and gold in there. You can put land. You can put homes. You can put timber. You're getting the idea. You can put a lot of things, but there's certain things like alcohol and gambling and whatever you can't put in your IRA investment. So some people, who knows, they might even trade baseball cards in there. But the point is, the rules tell them what to do. All right. So if you want to be a traditional investor, you're probably going to be thinking about staying with the stock market, bonds, mutual funds. If you're going to do alternative investments, well, now that opens up a whole new world for you. Now, my point is, all of the markets will work if you'll study them and pay attention to what the risks and the rewards are. Now, if you know that arena, then you can invest in that arena. But my caution is, if you don't know it, don't start throwing money at it. So if you want to learn and adjust, well, you certainly can do that. You're not going to make a fortune and get rich by Friday or Saturday. Personally, I've made some pretty big discoveries, and when I have, I've been able to make my money in the alternative investment market. A lot of people ask the question, what's the best alternative investment? I'm not sure they ever get the right answer because everybody wants to be a guide, because everybody has an opinion about what's good and what's bad. So I've made some discoveries that have worked for me. Now, I have not invested in every single market. So I found a market where I understood it, and I said, all right, now I'm not going to the casino and gambling. I'm not going to bet on the horses or the racing dogs or anything like that. I'm not going to bet on sports teams. I don't want to be an investor. I'm too conservative for that. I don't want to lose the money. So I'm risk adverse. So I want to mitigate losing the money. So in my opinion, I want to make sure that the biggest risk is the one that I'm avoiding. Now, it might be the biggest reward at the same time, but I want to avoid that. I want to be a conservative investor and make steady money. So I'm not going to get involved in commodities because now I have to worry about the weather. All right, so the weather could be the biggest investment risk you have, because what could happen if you get involved in wheat or pork bellies or corn or something like that, and the crop gets wiped out? Well, that means you're going to lose all that money. I don't want to do that. All right, now there's other investors. What they want to do is they want to buy rental properties. Well, I'm not quite so negative on that, because now I can look at the market, I can study it, and I can have rental property that increases in value slowly over time. In other words, like a marathon, a little bit at a time until you get to the finish line. All right, so all of these investments are going to have some kind of risk. I want to mitigate those risks as much as I possibly can. So if you get involved in government securities like bonds, or you get involved in stocks, there's plenty of those that don't have risk. So let's try to think of where you are in your investment life. So what are the best alternative investments? Well, I don't want to invest in something that I'm going to have a chance of losing the money. I want to make sure that I'm investing where I've mitigated my risk as much as possible. Now, if you listen to the government, you have to listen to what they say, but you need to watch what they do. Why? Because the government tells us, we'll protect you, and we'll have an army, and we'll have a police force and all that. Well, they protected us a lot when they spent $1 trillion in Afghanistan. How did that work out? Well, it didn't work out too well. Now, I've got a lot of gray hair, so I've seen them do this more than once. So I pay attention to what they say, but then I watch what they do. So you want to be careful with your investments and not just do what people say they're going to do. You want to really watch and see what they're going to do. All right, so fortunately for me, I'm looking for investments that are safe and secure. Bonds, CDs are safe and secure. But what about inflation? Inflation can wipe those investments out, because if you're getting 1% return on a CD, but there's 5% inflation, well, it's pretty easy to figure out you just lost 4%. How often do you think you're going to lose 4%? So the government's going to keep the inflation going because they're going to keep printing money. Why did they print money? So they can give it away. It's not theirs, so they're going to give it away. Well, you put more money into the economy, and now everybody pays the price. So inflation will destroy, absolutely destroy, what took you or your parents or anyone years to accumulate in a savings account can disappear very, very quickly. A good example is what's happened to gasoline over the last year. It's gone up almost $1 a gallon. That's inflation. There's no more value there. It's just inflation. And when you have inflation, you don't get any more value. All right, so if you can think of investments and learn about investments that are inflation proof as much as possible. In other words, silver goes up about as much as inflation does. Gold goes up as much as inflation does. Real estate generally moves along with inflation. If inflation's 5%, the real estate prices will go up 5%. All right, so you have to protect yourself from that because the government will continue to spend. They're going to say, oh no, we're really balancing the budget. Well, the budget they never made one yet that's been balanced. They just keep spending. If they keep spending, you're going to have a lot more inflation. So 30 years ago, I discovered an investment that was an alternative, okay? Highly lucrative market. And when I discovered tax liens and deeds, I could see that I could make my money instantaneously. I could buy, and when I bought, I made my money. Not when I sold, I made my money when I bought. Because the properties had been confiscated by the government and they were selling them for 10 or 20 cents on the dollar. That meant I was buying at a 60 or 70% discount. If I can buy at a 60 or 70% discount, I can make my money when I buy. If I make money when I buy, I don't have to wait to make the money. I'm making it right then and there. So if I can buy it for 10, 20, 30 cents on the dollar, so what if I bought it for 30 cents on the dollar and I sold it for 60 cents on the dollar? I'm still way under the market. It should be attractive for buyers. So now I'm going to make my money, but I want to do it quickly. So this investment is not for everybody. Why? Because it involves work. It involves thinking. It involves a little bit of planning. It involves a lot of self-confidence and ability. So let's repeat all those things. It's going to require a little bit of work, a little bit of thinking. It's going to require planning. It's going to require self-confidence. All right, so you just can't decide, I'm going to get rich by Friday. That's not going to happen. But if you can buy 30, 40, 50, 60, 70% discounts, now you're going to make your money when you buy. That's the name of the game. Make your money when you buy. All right, it's not going to put you on easy street by Friday afternoon, but what it will do is it'll allow you to buy at the right price so you can sell at the right price, and now you can protect your money. So your money can grow. So you know instantaneously how much money you're going to make before you buy it. Now, do people do that? No. They buy it, and then they pray that it's going to work. Well, is prayer really a good business strategy? I don't think so. But buying at 60, 70, 80% discounts with an alternative investment makes a big difference. So what are the best alternative investments? I don't know all of the ones, but I learned 30 years ago that I could buy properties that had a value of, say, $100,000, but I could buy them for 20 or 30 cents on the dollar. So that left me margin. And if I had margin, then I knew that I could not have to sell for 100 cents on the dollar. I could buy for 30 cents on the dollar, sell for 60 cents on the dollar, and I made some margin. I made myself a profit. I could know my profit before I went anywhere else. That's definitely an alternative investment. It's definitely something that takes a little bit of planning. It definitely takes a little bit of self-confidence. It definitely takes a little bit of learning. However, what takes place? Well, you guys are trying to learn something. Learning in the classroom is one thing. It always works in the classroom, doesn't it? It always works in the seminar. However, it doesn't always work in real life. This is one that will work, and you can look ahead of time and watch what happened. There's going to be 5,000 auctions every single year. All right, so alternative investments could be everything from bushels of corn and bushels of wheat to other commodities. It could be metals. It could be gold and silver, okay? It could be that you can't handle those alternative investments and you need to do stocks with a broker to help you to do that, or you need bonds where you know you're going to get a fixed rate of return, all right, or a mutual fund that you know you're going to get a fixed rate of return. All right, it's going to be up to you. What are the best alternative? For me, I found 200 years ago that there was a problem with people not paying their taxes. So the legislature said people must pay their taxes, and now the government auctions those tax defaulted properties every single year. Over 5,000 auctions are going to take place every single year. So you're kind of getting the idea. So the legislature put into place statutes. Now those statutes are in place, and they tell all the rules to the treasurer and to the board of supervisors of how they're going to run the auctions. You can now buy properties 60, 70, 80% discounts, and you buy and you make money the day you buy. You don't have to wait. All right. So if the treasurer can't collect the tax, what are they going to do? They are going to confiscate the property. When they confiscate the property, they don't want any more property. They're going to put it back into the marketplace. They want to sell it. So what do? They price it at 10, 20 cents, 30 cents on the dollar. You can buy those properties. And when you buy them, guess what? The mortgage is absolutely wiped out. These are public auctions, and they go to the highest bidder. Now, my name is Ted Thomas, and I'm running out of time on this particular video, but right below me is a free gift for you. You just need to register. If you have questions, send your questions. We always answer them. And whatever you do, if you're going to auctions, don't buy a property at auction unless you've seen it. Lots of things could go wrong. Basically, you could have a fire. It might be right next to a chicken farm that's not going to smell very good. What if there was a hurricane? It could be a lot of things happen. But when you buy at the auction sale is final. So you don't want to buy anything that you haven't seen. Second big mistake people make at the auction is they simply start bidding to win. You don't want to win. You want to make a good buy. So if you know what you're going to sell it for, know your exit strategy before you buy. If you know their exit strategy, you won't bid too high. So I'm Ted Thomas. I'll see you on the next video.